Ladies and gentlemen, good evening. Tonight I want to take you through a story of transformation, institutional strength and investor signals, the story of Bank of Montreal, or BMO as it's widely known. In a banking world that's being shaped by regulatory shifts, global expansion and evolving investor behavior, BMO is writing a chapter worth paying attention to. Founded in 1817, BMO is one of Canada's most venerable financial institutions, but what matters tonight is not just the long history. It's the way the bank is positioning itself for the future. The recent filings show a number of institutional investors are adjusting their holdings in BMO. For instance, Bank of New York Mellon Corp increased its stake, acquiring 18,460 additional shares for a total holdings of 765,073 shares, representing roughly a 0.11% stake and valued at about $84.6 million. MarketBeat. Meanwhile, Verser Investments LP took a $660,000 position in BMO on November 4, 2025. MarketBeat. These moves are subtle, but they speak volumes about investor sentiment and confidence in BMO going forward. So what does this mean? First, when a major fiduciary institution increases its holding in a bank like BMO, it signals that they see value or stability in the business. BMO is being viewed not simply as a legacy Canadian bank, but as a growth-oriented, global player. Second, the fact that smaller but active investment firms are stepping in suggests that there's recognition of upside, either via operational improvements, expansion, or capital returns. Turning now to fundamentals, according to MarketBeat, BMO has a consensus analyst rating of moderate buy. MarketBeat. The bank's P/E ratio is approximately 15.12, which compares favorably with the broader market, which trades at much higher multiples, and suggests somewhat of a discount or margin of safety. MarketBeat. The dividend story is also compelling. BMO pays a yield of around 3.8% and has a payout ratio in the high 50% range, which is in many banking investors' view a healthy, sustainable dividend. MarketBeat. So from a valuation and income generation perspective, BMO ticks some important boxes. But BMO's narrative isn't just about valuation, it's about strategy. The bank's expansion into the United States, its restructuring of its U.S. business, and its focus on wealth management and commercial banking all signal that BMO is trying to double down on long-term growth engines, not just be the Canadian regional lender. Reuters. On the other hand, the bank has had to manage regulatory and reputational risk. Earlier in the year, a unit of BMO agreed to pay about $40.7 million in settlements over issues related to misleading bond sales. Reuters. That reminds us, even stable banks have execution and compliance risks. So where could BMO go from here? From the investor standpoint, keep an eye on three themes. 1. Global expansion execution. If BMO's U.S. operations and wealth management segments perform as expected, growth could accelerate, and the valuation discount could narrow. 2. Capital returns and dividend sustainability. With many banks under pressure to support capital, any increase in dividends or a share buyback plan could act as a catalyst. 3. Risk management and macro exposure. Banking remains exposed to interest rate shifts, credit quality, and regulatory change. Any deterioration in commercial loan portfolios or higher provision expense could weigh on results. From a content maker's vantage point, when you talk to your audience about BMO, emphasize that it's not just a Canadian bank, it's a cross-border player with investor signals, expansion plans, and a dividend story. That's appealing for viewers interested in finance and growth plays. In conclusion, BMO stands at a crossroads of stability and potential. With institutional investors quietly accumulating, a moderate buy analyst consensus, a valued dividend, and strategic expansion in motion, the bank is presenting a narrative that deserves attention. Of course, execution matters. Whether BMO can convert strategy into higher earnings, expand in new markets, and maintain capital discipline will determine whether the stock moves from promise to performance. Thank you for listening.